I think what we've seen so far in African fixed income is we've had basically a separation between the haves and the have-nots. The haves have been basically the non-oil exporting countries and the non-metal exporting countries. So those have been countries like Kenya, like Senegal. They've done quite well, they're trading well. The other countries, which are all basically commodity metal producers, metal exporters, energy exporters, haven't done pretty well. But I think where you have the separation also creates opportunities. And recently you've seen some resurgence globally in commodities. You had iron ore go up 17% in one day. That's lifted commodities. You had oil back above $40. So I think there is the potential for some long-term opportunity in some of these commodity exporting countries coming out of sub-Saharan Africa. To be honest, actually, African fixed income, at least up into a couple of weeks, didn't really offer a lot of value. And the reason I'm saying that is because you had conventional markets, like in Brazil, like in Mexico, which were trading at similar levels to Africa. So in that sense, if you're an investor, why do you necessarily want to buy Africa when you can buy something in Brazil, which is more of a standard type of emerging market economy? It's not frontier. Liquidity is much better, and you're getting equivalent yield. You could buy things like Petrobras, which was 55-60% owned by the Brazilian government, at the same type of levels that you could buy things like Zambia. So in that sense, why do that? Now what you've had over the last couple of weeks with the resurgence in commodities and energy is Brazil and some of these other countries have rallied back a lot. So now you're sort of having the relationship that existed before, where frontier markets could trade at somewhat of a discount to what I would call the traditional emerging markets come back into play. And in that sense, I think if the trend continues, we will have some values crystallized once again in the sub-Saharan African markets. I think we have to put things in perspective. I think it's one default. Traditionally, emerging markets have shown default rates of 3 to 4% per year. Over the last 2+ years, and we're now in March, we've had 80 defaults. So this is one. So by comparison, it isn't really a lot. The second thing to look at is there's been no systemic type of problem in Africa. Yes, you had one default, but if you compare it to, let's say, to a country like Brazil, where you've had a widespread systemic corruption problem, Operation Car Wash, which has enveloped many of the bigger corporations and even gone all the way to potentially create the president of Brazil having to step down or be impeached. Africa, its system of corporate governance doesn't look that bad. What Africa actually suffers from isn't a default problem, it isn't a governance problem, it's more of an image problem. And it basically has a good story to tell, but it isn't very effective at going out and marketing itself and marketing its brand. I think that the biggest opportunities actually are in the bonds that have fallen, the names in energy, the names in metals, the ones that aren't necessarily at distressed, but are right now trading sort of in the $75, $80, $85 type of price range. And I think if we do see oil stabilize in the $40 to $50 range, if metals, if the recent rise back has proven to at least form a base, I think then some of these commodity names can do quite well, actually. The others I think that have a lot of potential are names like Ethiopia, which actually has a good story to tell. It has a good secular story to tell. It has no relation whatsoever to commodities. It's not a commodity exporter. It's not a metals exporter. It's not an energy exporter. But again, what it hasn't really done is effectively market its story. And if the country does come up with another bond issue, if it is able to go out and tell its story better, create greater interest, it could result in a repricing of its risk and end up with a pretty good performance, I think.